Good morning, everybody. What a day. Certainly one that reinforces anything's possible, huh? To have such a gap, a rally, and it fall apart. And when I mentioned, I think at some point in the day yesterday in the green room that earlier in the day when the markets had rallied, the breadth numbers were incredibly bullish. And that is historically supportive that it would hold on to the gain. But, more news, Powell talking, whatever, this markets get extended as they were. And, Fed tapering, tightening, plays havoc with the markets, but ultimately does not start a bear market. Prices are down. That's last we looked yesterday when I think that was like around 4%. Hold on a second. I don't know if we measure from the high or we can measure from the close. Well, actually, SPX from the high point, it's almost 5%. And we got this big 4,500 number there that'll put it almost exactly at 5%. And that's been a good spot where buyers have stepped up. So we'll see. I mean, we got a big wide range bar. It's just a wild bar. The gap up, it took out the high and came all the way back down here and stopped at that 4,500 level. It's in the area of minor support, which is subjective on the weekly time frame, but the weekly time frame is up, and we need to see momentum slow down. Excuse me. So you get these wide range bars. Typically, things don't turn on a dime. Momentum slows down. You get a breakdown failure. You get a bottoming tail bar. You get some type of price action where prices attempt to go down, rejected. So things are, well, they were up earlier. Well, still up here a little bit. Anyway, they were up further than they were. You see what's happening here on the Qs. There's an unfilled gap right here in the area of 44.80. I suggest you set an alert there. You may not be watching it. You got to prepare. Things did fall quite a bit over a bit extended. So the probability of a bounce, of some intraday bounce, the odds of that is pretty good. We'll see how far. And I'm just looking at the 5-minute here. We'll look at the futures. You mark off pivot highs, and what we need to see is some jiggling around, and the futures are going to tell us better. But anyway, with SPX, we just want to mark off significant reference points and set alerts like that unfilled gap there. There's another one down here. That would be quite a distance away, and just to know how far that would be. We're talking about 6.5%. So it's this, and the gap is just a little over 5%. So let's see what happens there. Reviewing our internals. I mentioned yesterday about this getting under 300. It's just about there. It did flip up quite a bit intraday yesterday. Quite a bit, because those numbers first thing in the morning were like 2,000 or better. And on the downside, the prior day was like a minus 2,000 or more. So, first thing in the morning, things were looking pretty darn good. We did pre-market. I talked about, it is at resistance. So we're going to see what it's going to do. Can it hold on to that, go sideways? And it did until around lunchtime, right after 11:30, where things fell apart and they just kept going. So this is down historically in an area, not quite 300. Things don't always set up exactly the same way. Even if we get a turnaround day, if the numbers are negative, this could at the end of the day be under or minus 300, and we could have sentiment good possibility sentiment coming into these bands, which tell us historically, start thinking about buying. Well, okay, buy what? Well, you have to start going through and doing the factory work. What out there is showing relative strength. So we see how nasty this looks. I know there's stuff out there that looks a lot worse than this. So we just look at the patterns and we'll find out. All right. And the spider's the size of the gap. It took out the high, out the resistance that was there. I did not have an expectation that it would take out the low. Yesterday's commentary was, I was pretty emphatic in my belief that it wouldn't happen. And here it is, it did. And part of the reason why this happened, as we saw this unfold yesterday in the green room, where there was actually a bottoming pattern that was occurring, where the momentum was slowing down. I believe it was right around here. And the Qs were looking a bit better. It was making a higher low. And I told him I'm going long above on the NQs, above 1 bars high. And I put a stop below the low and I got stopped out. And one of the things I explained at that time was, I usually don't trade things that tight. But I thought at that point, the bottoming process that was going on, that it could make a decent move. And it tried to. So one of the things that you'll hear myself or Dan say is, well, it went down because it didn't go up. And that is more about the psychology of trading and patterns and so on. So this bottoming pattern where the momentum was slowing down and then began to turn up again, and the Qs were looking better. And when it failed, why did it go down like that? Because this pattern wasn't lying about the accumulation, buying in anticipation of it, rallying a bit. And so why does it go down like that? Well, stops get hit. People start, getting out of those longs, and it begins to accelerate. And then when it doesn't bounce significantly, well, then panic hits and you get vertical moves. And that's what happened into the close yesterday. So now we've got this giant bar, which historically results in a consolidation day. And we'll see here, maybe an inside day down at the bottom. We'll see. Be aware of the unfilled gap here in SPY. So set alerts on the various indices. You don't know which one will get there. You don't have to watch it all day. Just set an alert, and that's what the computer does. Let it watch. It closed below the 50. Institutions don't like that. It makes them, kind of a unspoken sell signal or think about selling. Sometimes they just bounce right back up again and get right above it. So we'll see if it can recover today again from the whole number, get and close above the 50 MA. 2 or 3 days below the 50 MA, and institutions are going to become more uneasy. You can be sure of it. Though the Dow, cash Dow, down through the 200, right down near support, which wasn't that looking so bullish, and now it doesn't. But it's on support. There's going to be buyers there. Right? We look to the left. All those bottoming tail bars, bullish 180 reversal back here earlier in the year. They're going to buy just because it's extended. How far it bounces is an unknown, but clearly damage has been done. And even worse, more of wow, a wow of a year-long base and a wide range bar breakout and just completely failing. So look, what's going on in this country, in this world, I'll just, for lack of a better word, I think it's a crime, but it's playing havoc with the markets, and we'll get through it, sooner or later. It'll pass, whatever it's going to take, it will pass. These were holding up. That big green bar just getting negated. Down it went. And So while this showed relative strength, it was the stronger. It opens up the question, does, sometimes we typically use the term playing catch up as far as underperformers catching up with the leaders. We've been in this more bullish market for so long, playing catch up underperformers starting to outperform has been a pretty common thing. Now with this kind of negativity, it's like, well, do the outperformers now play catch up on the downside, which often happens at the end of a bearish event? This isn't a bear market, but just from a point of view of, hey, we can call this a short-term bear market that might last 2 or 3 weeks or whatever it might be. But typically through a bearish period, near the end of it, the ones that are the strongest, they throw in the towel. It's like, this thing isn't turning around, let's take our money. And you see this, the leaders play a little catch up on the downside. So maybe that's what we'll see happen in the futures. Looking at the NQs, you got a nasty big red bar from yesterday. And, this one is more of an igniting bar where we look at others. And we say that because this one was showing relative strength and holding up the best. So it's breaking down with a wide range bar. Whereas, looking at the Russell or the Dow, we see it's been going down for a while, and that those typically begin to stabilize, and this may play that catch up. Now, I'm just going to drag this down a little bit near this pivot low, and you can see it stopped pretty much like right there. So I don't mean to sound like a flip-flop, but this market has been one of a flip-flopper, man. And, with the internals being where they're at, I'm just throwing out other possibilities to have those thoughts. I don't want everybody to think, hey, this thing's got to go down, because nothing has to happen. It's just that as more things reach their reference points, the probability of a unified turn increases. But wouldn't it be just incredible if this bar could be negated? I have no idea if it could be, but this is what I call, a power bar, but the weakest link, meaning power bars are big bars and they trend. They have fluid moves that leave little to no, in this case, overhead resistance. And if we should get that stabilization and a turn, these bars like this can be negated. It's, not the norm, but what Dan and I do in these pre-market events and what we do in the green room is share our experiences in the market. And because, to see a bar like this, it's hard to imagine that it could be turned around, but I've seen it happen. At those times, it was my disbelief that it happened. But look, you have to be objective, and you have to have a method that allows you to be objective, or you just get caught in the past. We've all been there and done that. All right, so transports got crushed. Everything's getting killed here. There's panic, corona variants. Take away the crack pipe, the punch bowl, liquidity, call it whatever you want. So multiple things going wrong at the same time. I don't know if there could be a third thing to have a perfect storm type of scenario, but this is pretty nasty, breaking through support reference points and moving averages, and things were looking pretty darn good. Didn't go down in October, right? And things turned around, and we did have some speculation, Santa rally or coal in the stocking. And, for the moment, it looks like coal in the stockings. And, these institutions typically don't want to sell, as you get into the end of the quarter. And, the window dressing, all that seasonal stuff going on in the market, as much as the clown admin. I hear you, Ken. He certainly doesn't bring any confidence to what's going on. And, this whole COVID thing, we're all so sick of it. And then we hear about people that have been vaccinated and 14 boosters and they still got COVID. And it's like, really? After all we've been through here with shutdowns and it's like, hey, people get sick. And unfortunately, yes, older people even die from a common cold. And nothing wrong with producing some drug that could help, but how about people throughout their lives, kind of dropped the fork once in a while and did some sit-ups and run around and took some vitamins and took care of themselves. But anyway, let's keep going. Hey, silver down, wide range bar on support. Look for it to stabilize there. Gold holding up better than that, but no interest, too whippy and erratic. Bitcoin trying to hold after the little shakeout, not ready yet. And crude oil, just amazing. And this isn't about Sleepy Joe, putting a few drops of oil out there after shutting down the pipelines. This is institutions thinking, well, who the hell needs oil if nobody's going to be driving? What are they going to be needing oil for, petroleum products, if there's going to be no reason to manufacture things? So, that was what my comment when I saw this and talked about this in the weekend letters. Like, these institutions are looking at this as an all-out disaster back to the bunker. And I don't think so, Scott. I don't think they're selling oil positions because of EV stocks, because EV stocks aren't going up. They look like crap too. This is about being blindsided by what's going on. I'm not saying that at some point oil, it should become something where this really isn't such a commodity. It's like, can you imagine? I don't know, in our, probably not in my lifetime, I don't know, but you can imagine at some point in the future, they'll be saying, hey, do you remember back in the day where this thing called oil was a big deal? And down at support. And we got lots of things down at support. And yeah, for me, the MT Live couldn't have been better titled yesterday. Yeah, well, I don't I forget what I write from day to day thing. It's like whatever hits me in the moment. But I wrote shock bars. Oh, MT Live, yeah. So in the pre-market today, I titled the pre-market Mr. Toad's Wild Ride in the Markets. And, yeah, we got Dan and I, we did, that was a good one about shock bars and what turned out to be quite a shock yesterday. But anyway, short answer today is things are down a whole bunch yesterday. We got things near support. Internals are getting close. Look for some stabilization. A gap down in the morning, I think, is a better day to start the day, looking for some kind of a bottom. So we'll see what happens today and tomorrow. All yours, Dan.
Good morning. So yeah, yesterday the scare was Corona and also Powell. After getting elected, now I guess he's trying to be more realistic of what's going on in the world and inflation and all, and not needing these billions of monetary support. All right, gappers here. Where Boeing? Boeing stopped out of the put spread. We still have a short put on this and IWM, where we said we'll take assignment. So I'm getting a nice gap up on news of China going to allow them to fly airplanes there again if they fix whatever the derivative says. Other opens. AMBA, we sold a put spread yesterday. That's gapping down. So I moved stop 30-minute low on the one that expires tomorrow. We have another one, the 182.50s for next week. Pay X, we're still short. So that's fine. We're in trail mode. A DWAC here, this is the little Trump SPAC. I haven't looked at in a while. But now it's gapping up from 5 bars of going sideways and what we call minor bottoming tails. They tried to break down and didn't. So that's worth watching. I'll put that in a window. DCTH. Oh, wow, it was up earlier, 15. Look at this crazy range. 17 plus back to now negative. Wow. PHUN, this was another kind of Reddit boy short squeeze candidate, gapping up to 370. That's worth watching. I'll put that here instead of Boeing. Snow, I had earnings, nice monster gap up. That's now. Snow 350. So it's a shock bar. It's gapping over yesterday's bar, totally negating it. Gapping right there. So that's a candidate for, maybe day trade and or put spread. That'd be a good one DTE if we can get juice on it. Omer 844. Nice gap, maybe 30-minute high. Zuo gapping up a little bit. That's a we're going to be, I think next week is bottoming and topping patterns. There's actually an example of both of them. Bottoming pattern here with all the beautiful converging MAs. That's a good example. That's right where you enter. Topping pattern, retest of a breakout failure, bearish close. But nothing to do with it now. This was a little sell setup that triggered 2 days ago. This has, wow, that's a big gap. Wow. That's 246. Wow, that's massive. We'll come back to you. But when things get so oversold like this, I like watching them every day and see when they might want to. I mean, we have a big list of those actually. Cream is on that list. It's a Dow 30 component. Look how oversold this is on volume, and it's right at the 200, still in a downtrend. But that's worth watching. The Zulu stocks got Zillow got hammered, Piton. Look at this. There's so many oversold stocks, but this is an example of a potential bottoming pattern that is not ready. SNPs 344. There's no price void, but we'll come back. Splunk, that got hammered too. Wow, look at this beautiful 1, 2, 3, 4. That is beautiful. You got 3 inside bars that couldn't bounce after that nasty shock gap down. Wow, Greg missed that one. That was beautiful. $92. And we'll come back. 120. Wow, there's some big gappers here today. Look at this one. That's a big gap. He's laughing, Greg, because I blamed it on you for missing Splunk.
You blame me for everything, but it's okay. I like it.
Good. All right, you heard it. You heard it, Stephen. NCNO. Can't see where you're gapping, but that's sell setup. It's just sell setup far from the 20 is all. Yeah, David's asking about Apple. Yeah, that's what's the drag on the NASDAQ today. Greg, here's another shock pattern. Remember when we were looking at it 2 days ago? And you said, what are the odds of it going under this big bar? Guess what? Welcome to Schizo land. It did it 2 days later.
It's gapping under the green bar.
Yeah.
Well, they had something, this is weird because somebody mentioned in the chat room the other day, you mentioned because it was going up again, and they said something about their iPad sales and something were great. And now today they're saying that there's problems with their iPhone 13, whatever sales are. So
yeah,
crazy stuff day to day.
Right. They told their suppliers that the demand is slowing.
Yeah.
There's a beautiful breakout pattern from a short-term topping pattern. So y'all are going to see in that MT live, we're always looking for the tell. I mean, obviously an extended pattern that's building a ton of support or resistance and cracking, but the key is a tell. So there's a breakout failure followed by a bearish gap. So that's a good example of a topping pattern. WE, I think they came out and said they're going to restate some financials. Square is, I guess they had a conference call with Facebook, who changed their name, because now Square says they're changing their name to Block. I just see what the reaction is to the news, but there's another breakout failure right there. So that was shortable right there on that crack. And then here you had a sell setup with a 180 reversal. That was a good trade. RLX is a trading range mess. 5, it's a mess, gapped up, it's getting slammed. There's the Boeing coming in already from the pre-market highs. Costco, we've been watching this for a call spread. Kind of missed it 2 days ago. PVH, I don't like the way those daily bars trade, but it looks lower. It could be a day trade. 5-10 minute low if the market's weak. LE, gap's too big and it's already stabilizing pre-market. Kroger. Craig, remember this day we were looking at Kroger as a breakout. Another one slammed in your face. Crazy. When the market was weak and people going to safety stocks. Kirk, I think had earnings, and I think this is the Kirkland that supplies Costco. But no pattern. GMS, there's another topping pattern. There you go. This is a topping pattern called an M top. It's an M top with a breakout failure. So that would be I'll look right now because I think it had earnings. That's a candidate for a call spread. They don't have weeklies. $60, 95 by 350. So they're being a jerk again on the spreads. And then the 65s, 0 by 480. Thank you very little. All right, Netflix, we have a call spread that expires tomorrow. Let's see where the midpoint is at. We might just close it and be done with it. Yeah, midpoint 7 cents. And we closed half at 7. So yeah, let's just kill it. Yeah, things are stabilized here on the 5-minute chart, but 15 is still damaged. The hourly is actually a climb-o if it can, 30-minute high kind of thing. All right, we're done with Netflix.